Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Dr. Merav Ozair, global leading emerging technologies expert, Greg Cignarella, head of Americas at Tokeny, an Apex company, as well as Tom Shea, America's crypto and digital asset tax leader at EY. We're here to discuss navigating blockchain technology and cryptocurrency compliance complexities across differing regulatory framework environments and, of course, global jurisdictions. It is great to have all of you with us. Welcome to Trade Talks. Greg, I want to kick it off with you. Let's discuss the current state of digital assets and where we are within the regulatory picture.
Sure, happy to answer you, and thank you for having me on your show. So the regulatory landscape has certainly evolved pretty dramatically over the last several months. I mean, it's clear, take your administrations, whether you cared for whoever's in office or not, it plays less of a part. It's simply the case that in this newer administration, there's a drive more toward a pathway toward regulation that the market can adopt and can be comfortable with. So we've come a long way. I think we've got more to go before the markets feel comfortable and senior management feels that they can move forward in adoption. And with greater regulatory clarity, we're going to get greater confidence to move forward. Now, moving forward in and of itself has got its concerns. These are firms that have been in business for quite a long time, are very accustomed to doing the traditional ways of doing business. Now we're asking them to start thinking about parallel rails, a digital rail versus legacy systems. How do you get comfortable around that? There's also a matter of making sure that your compliance rules are enforced properly. And what does it mean to have a blockchain as your books and records, your golden source, as opposed to your traditional model? So we've got a long way to come, but I think the market feels a great deal more confident. And the institutions that we're speaking to now are not just looking at, I have an asset I want to tokenize and distribute. While that's still very much the case, they're taking even a step further and thinking about pain points that they're currently dealing with within their own infrastructure and thinking about solutions that blockchain can deliver for them. Yes, you want to make it operational efficient, but efficiency isn't in and of itself the deciding factor. Much of it has to do, especially for fund managers, we want to see expanded distribution, we want to see liquidity, and that's what we, at least on the technology side, that's what we're driving toward.
It's interesting, Tom, you and I just came back from Consensus, and you can see year after year how the conversations continue to evolve and mature in the space. Certainly tokenization, digital wallets, stable coins was a big topic this year, and to Greg's point, we're hearing more about operations, risk model, tools available, cybersecurity, compliance, all the terms that we're used to in the TradFi space, and you're seeing new classes of investors as well because of that.
Yeah, and I was excited because this was the first year of Consensus. They actually had a tax panel, which I was able to participate in. But to what you were saying earlier, Greg, is like we're seeing a lot of momentum with regulatory progress, but we don't want the tax piece of this to get lost, right? If you take like the Genius Act, right? A lot of progress, a lot of steps being forward. Is it going to end up being treated as cash? Okay, maybe it is, but then what about the tax purposes? Because right now it's not. So for income tax purposes, if you exchange a stable coin for cash, that's a taxable event. Now it's probably a micro penny of a gain or loss, but that's still a transaction that is reportable, that a broker may have to report to the government, and that an individual may have to report on their return. And so if you talk about this, like we're heading towards mass adoption, you think about all the transactions that we make with, in everyday life and the population, how much additional tax reporting is this going to create for something that's really just reporting like fractions of gains?
But these regulations usually don't tackle the tax issue, and this is unfortunate because that's create all these loopholes and uncertainty. So okay, we have a regulation, we can, let's say, buy, sell, tokenizations, but accession-wise, we don't know what to do with it, and then it creates all these questions and a need for people like you to come and help.
It keeps me in business, but we would like, as much as I enjoy it, we would like a little bit more of a framework to operate in.
Right, and that is a conversation that we have consistently on this panel and virtually every digital asset panel, or anything as it relates to whether it's emerging technology, AI, digital assets, gaming tech. You can't regulate by enforcement, and it's challenging if you don't understand your operating environment. Not only is it unfair to the enterprises, it's unfair to customers as well, particularly if you're acting within a fiduciary capacity and you're including these investments within client portfolios.
No, indeed, and I think fund managers are taking I don't know, a greater focus and look at how tokenization as one, as one part of the technology infrastructure we're talking about, how they're looking at it. But that in and of itself doesn't solve the problem. Now, Tokeny, we do asset tokenization, blockchain solutions, and this is kind of why Apex paid attention, because they realized that they have a traditional, conventional type business, and they want a blockchain type infrastructure overlay. And that's when you look at the fund management team, investment class is going to look at. They can't just say, well, I've got an asset, I put it on the blockchain, I distribute it. I still need my traditional service providers to do transfer agency, asset servicing, fund administration. Without that, you really can't even begin the initiation of a distribution model at the institutional level, fund managers. You can still do private security distribution. That's, most of those don't require those service providers. But at the larger institutional level, you need full front to back. And for that, you need blockchain adoption.
Right, well, let's stick with this conversation for a moment here. Merav, I'll get to you in 1 second. I just want to address this for a moment with Tom. When you think about how you have to operate, and it relates to compliance, complexities, not just across multiple products, but you have multiple regulatory frameworks and global jurisdictions, that adds a massive layer on top of that.
Yeah, and we're seeing progress on kind of the information reporting side, but on the income tax side, there's some jurisdictions that are far more advanced than others, and unfortunately the US is behind in a lot of those instances. So it becomes very difficult because so many of my clients operate on a global basis, and really trying to understand, well, what happens if I do something in this country versus that? It's difficult without that framework later.
Yeah. And Merav, I mean, we've spoken about this a number of times, just the global nature of this industry.
Exactly. So I'm always advocating for collaboration between nations, and there is something promising. I do know that the Chancellor of the UK, from the government, they say that they're going to work together with the US on innovation in digital asset, and because they also coming posted a draft legislation, a new legislation on digital asset that the UK has done that, and also the FCA, which is like the equivalent of the SEC here. So they also, moving to, legislation about stable coins and all the space of digital assets, and with the US is now also advancing in that. And the idea that they're going to collaborate, and maybe that will mitigate some of the frictions, the jurisdictional frictions that we have, because this digital asset that don't know a border.
Right.
All these transactions. So and like all these complexities that you have to go from one jurisdiction to another, and then figure out, okay, what am I going to do here with the regulation, taxation, etc., and how that's going to move around. So it's kind of like stifle a little bit, part of the innovation and the scaling. And if you have this collaboration, and I want to see more of that, hopefully, the UK and the US, that's a good start.
Right. So I see you shaking your head. I think I know where you're going to go with this.
Yeah, no, it's, and that's where we've been seeing a lot of, reporting guidance being provided in the EU through the OECD.
Right. Yeah.
We saw the IRS trending towards that, and then there was a bit of a repeal on the non-custodial regs that kind of, so we were trending towards that, where everyone was kind of aligning on who was going to be in scope, who wasn't going to be in scope, and then that kind of repeal of the non-custodial regs pushed us back a little bit. Now we're focusing on the custodial entities, and so there's this kind of bare space with the non-custodial entities.
Yeah.
And how we're going to handle that.
It feels as if, Greg, that the word custody is so key.
Yeah.
To making sure, or to at least ensuring that the integration of this works.
Well, there's no doubt. There are the service providers that I mentioned earlier, those aren't going away anytime soon. You have to start thinking in the decades before the regulators and compliance officers feel comfortable that that fiduciary duty and the responsibilities that each one of these institutions has is no longer needed, because blockchain takes care of all that. Now, we did see some change from the SEC recently when it comes to a transfer agent, right, and their ability to use a blockchain as the golden source, if you will. So now that in and of itself is very important. So now you just need to ensure that everything that you as a transfer agent were doing previously, all those rules and regulations, all that is enforced and properly guided internally. So you're never changing any of that. Custodians have the same thing. Now, custodial model is changing slightly, because now when assets are on the blockchain, it really becomes very much more about key management and making sure that, but they still have a responsibility for all their other custody duties. So nothing's going to change in terms of what their responsibilities are anytime soon. They must fit within the current framework of the market.
You brought up liquidity before. If you think 5-10 years out, with the traction, the momentum that stablecoins and tokenization has at this moment, that could significantly change the way that liquidity is sourced in the capital markets and where it lives.
Yeah, indeed, there's no question that the promise of blockchain and tokenization and distributed ledger, one of the biggest promises that the markets are looking for is liquidity. Now, liquidity, I think of it in two forms. It's a liquid secondary market where there's discoverable bid and offer prices. Second to that is the ability to take an asset, post it to a lender as collateral, right, for leverage. And this is where, if you point to the public markets are probably going to take a longer time before they move toward the blockchain, because though many can argue it's not as efficient as it should be, but again, like I said earlier, efficiency isn't always the game changer, right? Cost reduction is certainly a game changer, and they'll certainly look at that. But when you look at the glue, the things that, or rather the oil in the system that runs everything makes it smooth, this is where you need liquidity and leverage. And for that, I think it's key to have stable coin legislation. I think the Genius Act, we may be seeing that pass any day now. That to me is going to be a tremendous catalyst. It's going to give the markets clarity that they need, so that for cross-border payments, instant payments, be able to post it as collateral. Like, these things is what the market infrastructure needs in order for it to get to that next level of evolution.
I think that this time around, we've been talking about tokenization for years, and it kind of like didn't scale. And the idea of the democratization and liquidity, it's been, people were talking about it for years, but nothing has been done. But I think that this time around, there is more chances that it's going to happen. And the reason is, sorry that I'm always, hampering on that, that's agentic AI. Because now with everything is going to be automated, and you have an agent who's going to send payments and do all the transactions, on your behalf, it has to be tokenized. It has to be a stable coin. You cannot use fiat or anything other, and all this other mode of payments. And then the whole idea of tokenization and the need for blockchain or blockchain solution of some type of this technology, there's no other way. And I think this is why Coinbase, they just resurrected, there's a protocol, an internet protocol that for request for payment that was kind of buried, with I think HTTP 4.2, which any server can request a payment, and any client, whether it's human or a machine, AI, can.
Well, Merav, you brought up a really great point in your notes that you sent over earlier. July 23rd, 2025, when the executive order was signed for digital financial technology,
Right.
there's one line that stuck out to me. It's therefore the policy of my administration to support the responsible growth and use of digital assets,
Right.
blockchain technology, and related technologies across all sectors of the economy. That's interesting, because if you think about the development of regulation and legislation for AI, digital assets, and emerging technologies, you don't give that unlimited power
Exactly.
to tech intermediaries, those large, massive tech
Exactly.
companies. And that was the key, that's the genesis of Web
Exactly.
3.0. And I think it's very poignant of you to point that out.
Exactly. Now, you have to think about technology in a holistic way, the AI, digital asset, and I think this is why the administration, in their executive order, they were thinking about it together, talk about, blockchain and AI together. And that concept, I think this is very true, because we just talked here about, that tokenization and everything, and, that you need the infrastructure and everything. And especially now, if you're going to have more innovation with AI and you want to scale that, it has to come together.
Yeah.
And I think it has more promise this time around, with all the advances we see, from everything, from the AI, the quantum, and everything that is happening is coming together.
Tom, it's interesting, you brought up before with clients that you're advising around the role of some EU regulation that was introduced, and we're hearing that with emerging technologies, or with enterprise of any size, as it relates to data complying with GDPR, because it's the most stringent. So rather than having to deal with multiple jurisdictions, let's be the most compliant we can be and avoid that cost and avoid any potential issues around that. So when you're advising in today's tax environment, until these regulations are in place, what are some of the common challenges, questions you're getting, how you're addressing that?
Oof. I mean,
That's a big question.
that's a big question. It's a big question. And, it's really, when you break it down, I mean, there are fundamental types of transactions that are still there's still no guidance on. Participating in like liquidity pools, certain cryptocurrency lending arrangements. Can I apply a certain mark-to-market treatment if I have a heavy volume trade? These are all kind of like fundamental, like types of transactions to the infrastructure that there's just no guidance on, right? And then also kind of overarching all of this is, can there be, if we really want stable coins and cryptocurrencies to function as means of exchange, is there some kind of de minimis type of exclusion you can put on gains or losses? Because right now, all of these transactions are taxable and reportable.
Yeah, that's
Right.
And that to me is one of the biggest blocks for some of these companies really
Absolutely.
using
Absolutely.
currencies and stable coins as they are intended to be.
Right, and we have to think about it
but
from a
who
commerce
knows?
perspective as well, not simply just the investment side. I mean, how do you know who's collecting sales tax, who's collecting, if it's a multi-jurisdictional transaction, it gets, not that the U.S. tax code is complex enough, but when you start adding that in there. So let's talk, we have about 3.5 minutes here. Let's talk about outlook as we wrap up. Realistically, Greg, in the next, 3 to 5 years, I'd even say shorter than that. What do you see?
What do I
see
see?
this evolving?
Listen, I think as they say, the horse is out of the barn, right? I mean, it's not even really pointing at the cryptocurrency industry, which, as you know, operates on the same underlying blockchain and distributed ledger type technologies. Now, that has its own life, but when we look at the digitization of assets, for instance, I just see this starting to get more and more broadly adopted, in which case, at some point, when we get the legislation that we're looking for, and we get greater confidence to move forward, then we're going to have greater adoption as we really start gaining that parabolic move. I would have said 6 months or a year ago, we're not there yet. We're still not there, but it really feels close. I mean, it really feels like we're getting that adoption. We're going to get the legislation, but then there's going to be things that we still have to look at. So, for instance, there's the 40 Act fund has Rule 3C1 and 3C7 that has to be looked at because it puts a limit on how many accredited investors. For a private fund, if they don't need to register as an investment company, well, you only can have 100 accredited investors. Now, you could have as many qualified persons, which is 25 million and above. I mean, that's pretty dramatic. But if you really want to achieve democratization, which is another term we hear about, then you need to, at least in the U.S., you need to see those type of changes because, if you're going to have 200,000 minimum of annual salary or $1 million of net assets minus having in a house, well, you're going to hit that cap of accredited investors, I think, relatively quickly. So fund managers are going to hit a wall, so their ability to broadly distribute is going to be limited unless we see that type of regulatory change.
But technology always advances and regulation is always lagging. I mean, and you can't stop technology from advancing, and that will happen regardless of technology, of the regulation. The regulation will have to pick up, and especially with what's happening with AI. Sorry that I'm hampering on that, but that's exactly going to be the trigger because so much is happening there. And all this support from the tokenization and the blockchain, the infrastructure is going to happen to support the AI advancements. And then, the regulations will have to catch up.
Right. There's a lot for the regulators to digest. And the number one concern is protecting investors, which we all believe in and we all ensure that has to be put in place. Right?
But from a tax perspective, I'm in a similar boat as you. I feel like we're in a much better place, even though I'm not seeing tax guidance at the same pace. I was down in DC, number of conversations. There is focus on it. It's in the pipeline. So if we talk about 3 to 5 years, are we going to have that comprehensive tax guidance? I'm fairly optimistic we will.
Yeah, and I'm going to take the last word here because we have to wrap up. But one thing I noticed a consensus as well, in addition to tax being represented the first time, we weren't just talking about finance, we were talking about multiple industries. So you're going to see a different representation at these conferences as well. To Merav's point, that's where the AI regulation is going to need to catch up because it's not just about financial services. Thank you, everyone, for joining the panel.
Thank you.
Being on Trade Talks.
Thank you,
Thanks for
Jill.
joining me from Market Site. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.